Has anything altered your view about investing in U.S. equities over the last few months?
Not really. We've had a very conservative view, and we continue to have a very conservative view. I don't see the conditions that would suggest the market is attractively valued. I look around the world and I see the market at the high at 24 times earnings, currently around 22 times earnings. And I look at all the issues out there, and the multiple seems far too high. And it's high against current interest rates. I think interest rates are going on the 10-year and longer sector going to go up, not down. So,
right. So to that point, Leon, I mean, we've seen them go up, and we see that 30-year at 5%. At what point does that get super risky?
Probably now already. I have a conservative view of the market, so I don't know what you're talking about. I'm not going to change my view. I'm negative, and I'm looking to become positive. And I think the thing that would make me positive, to be honest with you, is when stocks acting better in response to bad news. Market tops are made on good news, and market bottoms are made on bad news. And I'm looking for the news to get worse. And there's a lot of things I don't like about the market. I don't like the action in gold. I don't like the absence of leadership in government. Valuations are too high, and I think we borrow from the future.
I am curious, Leon, though. I mean, when we talk about those points, I mean, valuations can be corrected. Trades in certain assets can be corrected. You mentioned the leadership in Washington. That's not something that, at least not as quickly corrected as you can in the markets here. So is this now creating a portfolio to stand the test of time, or to stand the test of something that, in your view, could just be temporary?
Well, look, all cycles are temporary. Economic expansions sow the seeds for the next recession. Every recession sows the seeds for the next recovery. So I look at everything as being cyclical, and I'm harking back to when I started my career at Goldman Sachs. I got my MBA on January 31st of 1967. Had no money in the bank, had a 6-month-old kid to support, and a new wife. Okay, I couldn't take a vacation. I started my career at Goldman on February 1st of 1967. The Dow was 1,000. In 1982, it was 1,000. I made my money by picking stocks. I think the very base case I see is that environment where the averages don't do anything and the actions in individual stocks. And I find that romantic because the public has been piling into the index, and the index is very expensive. And the individual companies outside the index are much more attractive than the index.
This has become much more of a stock picker's market. I also thought it was interesting just a few weeks ago. We heard from Tom DeMarco, who, of course, has advised you in the past. He was successfully called the top of this market and actually was very prescient in calling, at least for what now was the low in April. I am curious about this idea, though, of trying to find those individual stocks that are resilient. When I look at your portfolio in the Omega funds right now, your top holding is a mortgage company. And I am curious as to how that fits within the landscape of some of the concerns that you have right now and why it would not be pulled down by those same concerns.
Well, number one, let me just say this. We have an enormous profit thanks to management of Mr. Cooper. We bought that at materially lower prices. We've held on to it because we like the management a lot. They're excellent capital managers, and we think this merger with Rocket Mortgage is terrific. Because Rocket Mortgage has done a very smart deal here with Mr. Cooper. And so it's 7.8 times what we think they're going to earn in 26, and we think it's very cheap relative to the market, with very good capital management and a lot of free cash flow. And we see good growth ahead.
Leon,
Mr. Cooper,
sorry,
we put
go
Mr.
ahead.
Cooper as low as $2. It's $130, $125 currently.
Leon, you talked about the risks to the U.S. market, but AI is always a bright spot for U.S. market. And you own Google, and you own some energy companies that have exposure to AI data centers like Vertiv, for example. How do you look at that? Is that pure AI data center play, or is it something else for you guys?
I look at it with suspicion. In February of this year, all the conditions for a top were in. All the Wall Street strategists were raising up their estimates for the year. Now they're busy lowering them for the year. And in addition, You saw the crowding into technology stocks, which now have underperformed so far this year. And there was a great deal of optimism. Investor optimism was at a record high. Now, sentiment has turned very dramatically. Sentiment is very negative. So the only reason I wouldn't be overly negative now is, because I think that everybody's negative. And
where do you think the data center trade, though, has still overdone it?
Well, I'm very responsive to individual names. We own Vertiv, which we think the world of management have done a great job, and we think the stock's attractive. If I don't own it, I don't know much about it. We got to stick with what. Maybe I could talk about newest selections. So we recently added Atlas Energy Solutions to our portfolio. This is a very well-run company. The CEO, the founder, is Bud. I think. Give me a second.
The CEO, John, right? John Turner?
No. Atlas Energy, the CEO, chairman of the board, I guess. I'm not sure if his title is. Hold on.
Ben?
Well, yeah, well, you could keep finding it, Leon, but I mean, maybe just expand a little bit more on that, because I mean, you seem to be hitting on some key areas here, some key themes about bottom-up stock picking, and clearly a big focus on leadership at these companies and the ability to navigate this environment. So when you talk about
free
Atlas,
cash flow and intelligent use of the free cash flow.
Okay,
So
and that includes Ashland, Energy Transfer, some of the other names like that?
Yeah, absolutely. Absolutely. And again, we're very attuned to what we pay for a stock. Energy Transfer, we were buying as low as $6. Last sale was $18. We pay taxes, so I don't look to turn over the portfolio for no reason. So we tend to be a holder of things. We're not quite as intransigent as Warren Buffett, as good as he is. But the guy who makes calls to big shots at Atlas Energy had 3 energy companies before he sold, had a nice profit. And if you check the inside trading on Bloomberg, you can see that there's been significant purchases of stock by management. And when guys make money and they're buying stock for themselves, they're buying stock for the company, and you think it's cheap, we get motivated. So it's 10.5 times what we think they're going to earn next year. It's tied to energy, but if you look what's going on around the world, energy is not a bad place to be.
What about outside of the U.S.? Are there opportunities? Do you even look outside the U.S. for investment opportunities?
Look that much, but I'm not a good person to ask that question to, because we're running a small family office. And we're very big on management contact, and so it's discouraged us to go outside the United States. So recent purchases, I mentioned, Atlas Energy. I would mention GE Healthcare, 13.3 times earnings, growing, we think, 12%. Selling a very reasonable multiple at 13.3 times. And I like the insurance company, Fidelis. $20 plus book value, hard market for insurance, buying back stock. I think they can earn 20% on equity. That means they have $4 earnings potential. And when we get out of a catastrophic environment, a normal catastrophe year, they can earn $4. Buying back stock, excess capital. So it's a big discount to other insurance companies. It gives you a deal.
Leon, what's your biggest concern right now? Like, I see the individual stocks that you're talking about, but in general, when you wake up in the morning, what worries you?
Well, when I get up in the morning, I worry much about. I support an organization called Kindness Matters 365. What I'm very disturbed about is our fiscal condition and our inability to have the two parties work together cooperatively to deal with this. We're heading to a financial disaster. Even this new budget proposal, it's a tax and spend kind of thing. It's not dealing with a deficit. Deficit is $2 trillion. It's just too high. The amount of debt outstanding is ridiculously high, and nobody's focused on it. And we're going to have a financial crisis unless they start spending on it. and the bond market is going to get them to focus on it. We have a system of leadership in the country. It's leadership out of crisis. We're not in a crisis, therefore there's no leadership. They argue with each other.
Yeah.
This Kindness Matters takes kids off the streets at age 3 and 4, and they teach them the importance of kindness. And these people talk to each other in such a rude fashion, it's very discouraging.
With regards to the budget and our deficit and the fiscal situation, Leon, does the market have the ability to really push back?
Well, the bond vigilante sure could push back. I go back to the market get capped out by interest rates. Interest rates are not going up. If interest rates are not going to go up, then the stock market will be okay. But I think interest rates are going to climb higher.
How high do you think they go?
I don't know, a lot higher. Prior to 2008, the 10-year government bond yielded in line with nominal GDP. If you have real growth of a couple percent and you have inflation of 3 or 4%, the 10-year could be as up to 6% or higher.
Wow.
And you have a capital loss. And the coupon is sufficiently low that you'd have a loss of principal.
So I guess
And I think their individual stocks are cheap relative to bonds, even though the market as a whole is expensive relative to bonds.
But that puts us back potentially, Leon, into territory where we're almost talking about double-digit percentage yields in order to compensate for that deficit, for that debt servicing cost. What would that even mean for the economy and, more importantly, for financial markets?
Well, I think that if they deal with the deficit, it's negative for growth, right? Because it retards growth and consumption. And I think my theme is that we've run a very inappropriate fiscal policy. I don't blame the President Trump. I actually say he's not doing it the right way, in my opinion, but he's doing the right things. It's very, very difficult to, comprehend. Mm-hmm. Maybe I've had a lot of medical issues the last 2 months. I've had a lot of meetings with doctors and hospitals and stuff like that. And, I haven't gotten a bill. I like that. But the fact of the matter is maybe everything should be more means tested. Mm-hmm. And I think the wealthy people should be paid more in taxes, not less.
Well, I'm sorry to hear that for you, Leon. I hope you're doing better now. Before we let you go, what excites you now? If we're ending on this negative note, let's end on a positive note. What gets you going in the morning?
What excites me is buying a Mr. Cooper and having it go from 6, 7, 8 to 125. That's what excites me. Not because I'm greedy personally. All my money is earmarked for charity. I've taken 2 giving pledges, one with Warren Buffett to give half my money to non-Jewish causes, the other half with Mike Levin, my friend, who has a Jewish giving pledge. So I like making money for 2 reasons. If I lose money, it means I'm wrong, and I have an ego like everybody else. And that's number one. Number 2 reason I like making money is I like to give away more money. It's my only envy of people like Bill Gates and Bernie Marcus, who recently passed away, is they have a lot more money to give away. And my hero in life is Ken Langone, who is very generous.